Welcome everybody to episode 13 of the Bulls and Kangaroos. Stephen, how are you?
I'm good, Peter. Good evening, good morning from where I am. How are you, mate?
I'm actually good actually. I was surprised there was no jet lag after the trip to the States and back. It was a quick turnaround. I left like about 2:15 last Tuesday morning and I got back just after 11 o'clock on Saturday night, which is a lot of traveling to go to and from the States in a short period of time. But no, I feel good. Got some good sleep on the plane on the way back. So yeah, I'm feeling pretty good
Okay, mate.
and chilled and ready to go.
Yeah, no,
And
that's
your
it.
week, how's it been?
Yeah, it's been all right. Learned a little bit about video editing in your absence. So yeah, thanks for that opportunity.
No, that's all right. So back to normal this week. But no, you did a great job. I found it really interesting. It was a really interesting episode in the factors of paying yourself once a year rather than taking that money out once a month. You know, it's amazing the difference it does make to your account as you go along. So anybody that missed that episode, I'd highly recommend going back to watch episode 12. It's really quite eye-opening, and it's amazing how much of a difference it does make to your account over the course of a year. So on with things this week. What I did really with my video this week was it's quite a short video, but I thought we're trying to make this as real as possible and exactly what's happening. So what my video really is going to be talking about is what I do when I have to take a break away from the charts. And that could either be enforced, maybe unfortunately through an illness, or, in this particular case, it was through work, or if you're taking, annual leave. So let's have a look at my video and see what everybody thinks. And we'll have some questions from Stephen afterwards. Hi, everybody. Yeah, as Stephen would have told you, last week I'd been away in the States. I had a business trip, and that took me away for the best part of 7 days with a lot of travel. Um, so really, I've done no back testing in the last week. I'm literally away from my charts. I don't have any facilities when I'm traveling to check, the charts for back testing. I don't have the correct tools. So what it led me to do was the idea of a video for the week was what do we do in these situations when we're live trading, when we actually need to, um, when work or a private matter, like, maybe a holiday or an illness takes over your trading for either a short period of time or a prolonged period of time. Yeah, so the way to put things that I'd always been recommended to do was rather than be sort of jumping straight back into the market, is give yourself that bit of time to sort of ease yourself back into the ebbs and flows. Now, if you've missed a trade or you miss a trade during this process, you know, so what? It doesn't matter. It's better to have missed a trade, and be looking at it and wish you were in it rather than being in a trade that you wish you weren't in, because, that's basically means you're going to be losing money. So what I would always recommend is that when you come back from a period away from the charts, is that you give yourself those 2 or 3 days, or if it's been, if it was a prolonged period, like for instance, a month or 2 months away from the charts, rather than just diving straight in, reading your trading plan and getting started, I would recommend taking a week or two of just demo trading and just looking at the markets and just building yourself back into the ebbs and flows, and then start live trading again. So that was my bit of advice. What do you guys think? It's interesting to see whether Stephen agrees with that or he'd have some other ideas. Okay, let's get back to Stephen. Thank you. Any questions for me?
Okay, mate. So, do you change your approach depending on like how long you might be away for?
Yeah, absolutely, I do. I mean, for instance, like this particular example, well, this was, it was real. I was away in the
Mm,
States, so I've missed effectively 1 week
mm.
of being at the chart. So, as regards in a live trading, I'd want to at least give myself 2 days. That's
Yeah,
what I have down
yeah, yeah,
as 2 days now. But if I was stretching out, going to an extreme, and it's going to be a month that I was away from the charts, I'd want to be giving myself a minimum of a week.
yeah, yeah, yeah. Makes
And what
sense, mate.
what's
Ramp up a bit. You want to ramp up again, don't you?
Yeah, because if you just dive in, I just think you're just asking for trouble.
Got to get your
And for
mindset back.
yourself,
Yeah.
yeah, and for
Uh,
yourself, what sort of time frames would you have written into your trading plan?
so it takes us such a long time to establish some of the habits that we know that are important to trying to be consistent in anything that
Mm,
we do, so that when you have a break, it's easy to um sort of lose all of that effort that you've put in. So I like to just give myself a chance to know that I'm back into the routine and I'm not
hmm
feeling like getting and doing, checking in at my time slots. I don't feel like
Yeah,
they're a chore. Once I get settled and it just becomes business as usual, then I'm happy to sort of like get back into it, and that might just take a couple of days of
yeah,
4 hour
yeah.
check-ins. Yeah.
And what do you? What's the measurement that tells you that you're back into the sync of things?
Uh,
What's your
um,
measurement?
so I have a little record of every time I check in at the charts. So like
Yeah,
I've got all of my running training things that I do. So once that's all back on track, once my attendance and my 4 hour time slots are back in track,
yeah,
that might take half a week to a week if I'm
yeah,
away for say, a week or two. So yeah.
yeah, yeah. Okay, cool, brilliant. Excellent. All right then. So as I say, it was a short little video, but we just thought it was pertinent to have that in there to, just encourage people just to, when you do come back from that break, just take a step back. Don't go diving in. Just hang on there and just ease yourself back into things. So anyway, on to your video for the week, Stephen. What's your topic for the week?
Right. Okay. So over time, I've put together a sheet or a worksheet, an Excel type sheet that it's like a diary page. It's one trade per page, and it
Hmm.
just captures all of the relevant information once you get into that in trade position.
Yeah.
It's not like building your trades over time spreadsheet and equity curve. That's a different thing. This is like a diary page for that particular trade and how I log
Hmm.
all of the information.
Brilliant. Okay then, let's take a look at your video.
Okay, so I thought it might be useful to share with you how I capture my trades on a spreadsheet that I've set up, and how I make sure that I've got all of the important information and I've got a space to log any observations, and it just keeps everything, the progress of the trade and the outcome and anything that I experience all in one place for that particular trade, and it allows me to go back and over time, hopefully I can use the information that I've captured at that moment to improve and make fewer mistakes hopefully, and improve profitability. So what I've got is I've got a template that I've got set up, and the way the template is set up is that I've got, you can see it here, it's already like the boxes are all there, the questions or the prompts are all there, and what I do is when I get a trading opportunity, and I'll just go back to that one that I was looking at, I think it was that one on the pound dollar, yeah, um, when I go back to this sheet. So what I the way I operate and the way I've tried to get myself into the habit of using this sheet is I always start from the top left hand corner when I'm populating the information. So once I get to the point where I see a potential trading opportunity lining up, what I'll do is I'll think, all right, I'll use the template, I'll get the spreadsheet ready, and I'll just have it sitting there on one of these tabs that you can see at the bottom. What I do is I'll enter the pair that I'm interested in, the time frame, and then the name of the strategy. And for me, this is the strategy that I'm working on, or the one of the strategies that I use. I've called the structure-based strategy. Not very exciting, but it describes my approach. So what I'll do then is I'll type in whether I'm looking for a sell or a buy opportunity, and you'll see that I've just got it set up so that it changes color. Um, it's always there live, just so I know I'm dealing with a live trading opportunity, as opposed to say something where I might be demo trading, or if I've been back testing and then I'm demo trading a particular strategy. That's just to remind me that it's a live trading scenario. Um, the date that I've set up the sheet. So that might be if I place an order, and then you'll see that I've got another box here that asks me to fill in the triggered date. So for instance, if I'm setting up an advanced pattern and I'm waiting for, say, a D point completion, that date can be different from the actual triggered date. In this case, on the structure-based strategy, this is almost an at-market entry. So I'm entering the trade, on the same day as I'm putting this sheet together or putting in the key information. What I do then is I've got my entry, stop loss, targets, my ATR, and I can pre-populate some of this, so I can put my targets in that I'm looking for before ahead of the trade, and I can estimate the stop loss. But because I use an ATR, I just need to wait until I get the candle close and the confirmation that I need, and I can populate that, and then I'll go for the entry, and then the entry there, or as soon as I get filled, I'll just double check with my broker to make sure of the entry price that I actually got, and I'll pop that in there. This lots per target, that's given to me by my smooth ratio money management spreadsheet that tells me how many lots to place on each trade given previous performance of my trade and strategy. And that's just one of the money management techniques that you can use. So I'll keep an eye out for that. And then the outcome. So I like to just keep up near the top of the sheet the outcome of the trade, and I just type this in. I've also got another little box here, and that says make a note if the entry becomes invalid and the trade does not trigger. So sometimes, say for instance, on an advanced pattern strategy, you might get to the C point, and then I like to, if I'm starting moving towards D completion, I like to place the order just in case I'm asleep when that D point triggers. But then sometimes I might get up in the morning and I'll see that there's been a big C point violation and the pattern's become invalid, and then I'll just record that in there, and then I know that when I look back in review, it's just another little bit of information. Okay, so the chart I'll put in prior to the placement of order, and because I'm tracking on a separate sheet, my daily login, my daily check-ins, and the planning and the reviews that I do every 4 hours. It's when it gets to the actual placement of a trade, that I move on to this sheet. So I give a little bit of an explanation about what I was doing, where I was, the environment I was in, just because sometimes it might be that I'm at work, but I know, say, a trade potentially is going to trigger or give me an entry at, say, 2:30 in the afternoon. I'll just make sure that I record where I was. I like to try and take myself away if I can, just to give myself 10 minutes to get that clarity of focus, and I'll make a note about that. This little notes section is really, so let me just go back to that. So that's just a screenshot of where things were at, and that just gives me the visual reminder of what I was thinking at the time. And it is interesting because you go back and you can see that what might have your memory or your recollection of how you felt in that trade, when you read the notes that you made at the time, you can actually see that sometimes you were kidding yourself a little bit, or you were, without realizing it, and in retrospect, hindsight, you might not have entered a particular trade, or you might have done something differently. So this in the moment note taking, I think, is really valuable, because you, as I say, when you're in the moment, you've got the whole emotional, not the emotional stress, but the emotional effect of being in the moment and wanting to place the trade and wanting to get the order through the broker and all of the other things that go on with it. I've got a little section there that I write emotions at the key stages, and that's really sometimes, I might place a trade and I might feel rushed, or I might have been watching something or watching an instrument and the price action for so long, and I'm thinking it's getting there, and then I might think, I was just relief. Maybe I felt relief to be able to enter the trade after watching it for so long, and you just try and make a note of those kind of things. Then what I do, as I've said, I check my charts every 4 hours. So each time I check the progress of the trade on those 4 hour slots, I just make a little screenshot. You know, I just take a little screenshot, um, and I just log a little notes. This one just says order placed, so that's all that is. Pop that back there, and then I just go along, and I just number them for my own reference. Each time, you can just see prices bumbling along. I've got a target down here, and I'm just making notes to the effect of, screenshot prices looking pretty random at the moment. You've just got this sideways motion going on. Pop that back in there. And I do this until I get a result one way or the other. Down here, this is my chart at exit. So this is all in progress screenshots. This is all chart at exit, and any other notes that I want to make, and any reflection that I want to make. So I've got a post trade observation here that my decision. I'm happy with that. My decision to take profit at this daily support level that I've been watching proved to be correct. So that's just a little bit of validation that I give in review. And then I've got this little box here, and I've got some questions that I ask myself when I do a review of each of the trades. So some basic things: is all the information on the sheet accurate? So I can go over my orders with the brokers and just make sure that I've written down some of that key information, entries, stops, targets, make sure that's okay. Have I done something silly like written the wrong pair in that box that I showed you at the top of the page up here? Did I make an error? If so, what error did I make? In this case, I didn't see any, so I just made that NA. But there might be. I might have thought I had a higher close, and then I've entered a trade, and I made an error. And in this review, I might pick that up, and then I can do something about it. You see, so I ask myself, have I made this error before? Just realised I should have made this a lot bigger, but have I made this error before? Can I work out what the result would have been without the mistake? Because sometimes you profit from a mistake, sometimes you lose from a mistake. Do I need to change my rules? How do I make sure that I don't make that mistake? Is it a straightforward thing to deal with? Like, is it just a process? Is it a step by step? Is it like an item in the step, or is there something deeper and more complicated going on? Have I misinterpreted something on the charts, or is it like almost like an admin error that I've made? Do I know why I made the mistake? Sometimes I might not be able to put my finger on it. And then I've got, did I gain or lose? And that's important when you want to start working out the net performance discrepancy, and that's a whole other subject, really. And that's how you want to try and grade and rate your trades in a particular way. And that's something that I'm still working on, just to get better at grading and rating. But until I nail that, I've got some questions that I ask myself up at the top here. Happy with my analysis? Quite straightforward, really. Overall, am I happy? So I'll give myself a little score. Did I enter the trade correctly? Are my stops in the right place? Targets in the right place? Was I at the chart at the correct times during the trade? Did I exit correctly? And did I review the trade? Now, they're just basic little scoring metrics. But what it does do is it allows me to then start comparing and measuring. And I take that information and I make this this summary sheet. What I'll do there, just so you can, I'll tell you what, I'll just do that, and then I'll just do that, and then you can see that a bit better. Okay, so what I do is each of those items are in this column, are in these columns, and for each quarter, each trade that became a trade, not opportunities that presented. And then, like, say, I talked about the example for the violation earlier on. They each go into here, and I can add those scores in, and these are the trades that I've referenced. And then I have a little summary box, and this is how I start measuring my performance and consistency, I suppose, in the review process. So, have I reviewed the trade? You want that to be 100% all the time. I added a reviewed within 24 hours and at the beginning of this year, and that was really just to see if I could get into the habit of doing that while the trade was still relatively fresh in my mind. And in the first quarter, I managed 12.5%. This 24 Q2 so far, up to 60% reviewed in 24 hours. So that's just another thing. You just want to see everything on the upward curve, really. And then this good trade rating, I just called it a good trade rating, is really just the average of all of those trade scores that I showed you. And then I'm always trying to compare some of these things, the good trade rating, to where I was last year, and just trying to continuously improve that. So really, I just wanted to share with you how I go about capturing the trade information, and then just using some basic functions of Excel, really, just to some simple formulas, just to be able to start summarising how you're doing, where you might want to see make improvements, and just sort of where you can take it, I suppose.
Okay, Stephen. Yeah, great little video. So really, the question I have for you is, what was the inspiration behind creating this really class document?
Thanks, Peter. I think when you start off, you're trying to find your way of capturing information, and you don't really know what you're going to need further down the line. And so I started off anyway with lots of different spreadsheets or
Hmm.
handwritten diaries or things in a Word document. And then just over time, and I think the way it grew was organic, really.
Yeah.
This isn't the first like version of this sheet. There's a lot of, like, clunkier versions that I've had, and from the past, but this is just what I've settled on, because for me it just puts that order and consistent repetitive approach to capturing all of the
Hmm.
information. Like I said in the video, when I've got the sheet in front of me, I'm always starting from the top left hand corner and
Yeah.
filling the sheet out, down and across
Yeah.
as I go. So
Yeah.
I'm the pairing, the time frame, the trading strategy, all of the where I want
Hmm.
targets, projected
Hmm.
stop loss entries. I'm writing all of that information, and I'm sort of building it down. And then as the trade
Hmm.
progresses, I'm capturing the screenshots at each
Yeah.
check-in time.
Yeah.
And it really just sort of grew over time until what I imagined in my head was, if I had like a folder, like an A4 ring binder, and I had
Hmm.
to have one trade on a page, I just wanted to set it up so that if I was to print them out, I'd have, like, oh, there's that trade, and it just becomes like a little bit of a, like a diary. Yeah. So
Yeah.
all
Yeah.
of the
Yeah. Yeah.
trades I've ever done, there's a little page
Yeah.
for each one. And yeah, yeah, yeah. So it sort of grew up over time.
Mm, mm.
And it's got links to other sheets as well. And what I didn't go into detail on there is, for my quarterly and annual reports, some of those metrics, those good trade
Hmm.
percentages, they get auto fed into another sheet, so that if
Right.
I'm reporting to, if I was to have an investor come to me and I was managing their money, I've got it set up so that, as well as the actual performance of my trading with the
Hmm.
equity curve, information is auto populating into, so like a master sort of business
Yeah.
annual report.
Yeah. No, that's really good, because I think the thing I like about that is, if an investor wants to know what's going through your head at that particular moment, they can, as I say, pick up that one pager and they can get all of the information of what's going on.
And well, I mean, yeah, I mean,
Really
they
good.
can, yeah, and I'd be careful about exactly what I share, because I'm completely honest in this thing. So, and sometimes that's for me, and for my reflection. But what the investor gets to see is, like, the good trade rating and how I'm assessing my performance and the
Yeah.
things that I measure. So if they see like I'm up in the 90s, 91% for the good trade rating for this quarter,
Hmm.
if they see figures like that and they understand how that's being measured, then maybe that's enough for them to be able to see
Yeah.
you're
Yeah.
on
I
track,
get it.
and that's your performance
Mm.
consistency. That's what I'm looking
And
for.
and and how much of an increase have you seen in your in that percentage? You're saying it's around that 91. How where was it before you had a document like this?
Well, I mean, yeah, who knows the consistency of like review,
Mm.
because you add that little gamify, you sort of gamify it a little bit because you're giving yourself a score and then you can look at your personal best for the last quarter and you know
Yeah.
you can try and beat it. So
Yeah.
things like just did I check in at every 4 hour time slot?
Yeah.
Yeah. So what I do is if I know that I'm going to be measuring like my performance like on that sheet, it sort of inspires me to to gamify the
Yeah.
whole thing and just try and get better each time. So
Mm.
yeah, like the first quarter of the first year was like I think I had like a 70% good trade rating, but like I'm up to
Yeah.
91% now, and it's something that
Brilliant.
I monitor and look at. Yeah.
Yeah, that's fantastic. And there was something you wanted to mention to people about the trading diary, wasn't there? I believe you said to me
Oh
there was something you
yeah,
wanted.
yeah. If anyone wants to know how to put this thing together, or they're interested in getting a copy of it, or if they want me to explain some of the formulas I linked it in there, just ask for it. Yeah, if you ask for it, we'll be able to put something together and get you out a copy.
Yeah, yeah, exactly. You can find the email address, I believe, inside our channel here, but I think it's bulls and kangaroos
Bulls
at
and
gmail.com.
kangaroos at gmail.com. That's bulls, AND, kangaroos at
Mhm.
gmail.com.
Brilliant. Okay, that's a very nice, genuine offer for you, Stephen. So on that note, really, that probably brings us to the end of the show.
Yeah.
And we're back in again next week. Now I'm actually away again next week. I have another business trip next week. Just having a bit of a run on those at the moment. I'm actually going to be in Barcelona all week. So it's going to be back to Stephen for the week, but I will be back the week after that. So I will leave you in Stephen's capable hands for next week. But as we like to say, please be part of that 10% of traders that 100% trade your trading plan. Until next week, thanks, Stephen.
Cheers,
Goodbye,
Peter.
everybody.
See you,
Bye bye.
everyone.
Bye bye.